Hello and welcome to today's NinjaTrader ecosystem event, Mastering Market Moves with Delta Analysis. My name is Thomas and I'm a platform representative here at NinjaTrader. Now, before we start, I have a few housekeeping notes. Now, this webinar is presented by NinjaTrader LLC, which is a technology company responsible for developing and supporting the NinjaTrader trading software. Broker-related questions should be directed to the NinjaTrader brokerage team using the phone number or email on the screen. And if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can get your free account by clicking the link on the screen and then clicking Get Started under the Welcome section. And before I turn over the mic to Calvin, it is important to understand that futures, foreign currency, and options trading contains substantial risk and is not suitable for every investor. It is possible to lose all or more than one's initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. And please remember that these trading solicitations are not solicitation or recommendation, but simply educational in nature. And again, thank you again for joining us today. And without further ado, it's my pleasure to welcome Calvin into the webinar room.
Thanks to Thomas for that great introduction. It's a pleasure to be back again presenting another webinar with NinjaTrader. I hope you can see my screen here now because I had a little bit of technical problems. I hope you can. If you can see my mouse moving, could you just raise your hand and I'll feel comfortable? I think you can. Thanks very much, guys. Yes, right. So, as I said, it's great to be back presenting another NinjaTrader webinar. And thanks to you all for attending. Do stay, you guys, do stay till the end if you can. And we'll be doing all the questions at the end. So if you've got any burning questions, just bear with me till we get to the end and I'll do my best to answer all the questions as much as I can. Before we get started, I'll tell you a little about my trading journey right up to where I am now with Success Futures. I started my trading journey over 12 years ago. I started with a brief introduction to options trading, but quickly moved on to trading Forex. As most of you here probably have traded Forex before, you probably know what kind of market it is and how you don't get a lot of information. As it did seem much easier when I was doing Forex, and using the technical indicators, it was very smooth going. I enjoyed it. But one of the problems I had was consistency. After a while, I moved from trading Forex and moved into futures and moved into trading using order flow for my trading. And I found that I started to gain a bit more consistency. It's much better than one moment you're doing well and the next minute you're giving it all back to the market. And yeah, unfortunately, I spent a few years chasing my tail because of lack of consistency. But as I'm going to say to you today, I'm going to show you how you can improve that consistency and make your trading become something you can be confident doing. So I look back and I really realized the fundamentals of what really moved the markets was missing from my knowledge base. I didn't really know what fundamentally moved the market. So it wasn't until order flow that I was able to find my hidden edge. And that's the key, the hidden edge to gain your consistency. And today's training is about finding your hidden edge to understand how to get consistency. Yeah. Today, I'm the founder of Success Futures, and our aim is to help you to find that hidden edge. Today, as I said, before I get started, we are talking about order flow, and some of you, I'm aware, do not even trade. Maybe don't trade. Some of you are very new to trading. Some of you have never heard of order flow, and some of this information may go above your head. But do not worry. Just look at it from a concept point of view. Look at it from the idea sounds good, rather than, if you get lost, rather than trying to find your way out of the details, just focus on the concept. And those who can follow me, great. You'll get a great idea of how order flow and delta can help you in your trading. Okay. Before we dive in, let's think about a game of cards. So we're going to look at mastering marketing moves with delta analysis. But before we do dive into that, we're going to think of a game of cards. What if you were playing a game of poker and some of the players had their hands hidden, but you and a couple of guys have got your cards laid out on the table for everyone to see? Now, that sounds crazy. It sounds unfair, but how would you feel about risking a sizable sum of money playing in this type of game? If you started losing to the guys, which is inevitable, yeah, those guys who have their hands hidden, if you start losing to those guys, you would probably feel frustrated and disillusioned, and you'd feel like the odds are stacked against you. Well, this is exactly what is happening in your trading when you're trading using standard candlesticks and standard moving average indicators. And if you're using them, I'm not saying what you're doing is wrong. No way. What I'm saying is, why not be one of the guys who can see the other player's hand? Why not get the edge? Yeah, because this is what order flow does. It gives you a peek into the underlying intentions of the market. And once you can see that, you have an edge to compete in the markets. You'll trade with more confidence. The best traders can see your hand. So why not see theirs? And that's the key. Why not see theirs? Order flow is all about the orders and how buyers and sellers interact at any given price. The sight of the numbers can feel intimidating to some traders. So naturally, some people are a little worried when they see all the numbers moving around, often very quickly, and they find analyzing order flow very challenging because of that. However, today we're going to briefly look at how we can master order flow analysis simply by ignoring general or normal behavior and focusing only on what matters. And that, in a nutshell, is unusual behavior. What matters to us as traders is finding unusual behavior. Maybe unusual volume size, unusual behavior at a particular price. It's a bit like everyone is in a field and they're all in grey, and there's one person in red. So you can ignore, if you're looking for the person in red, it's easy to find that person because everyone else is in grey. And that's the way to approach order flow. Look for the unusual stuff. If you get bogged down with all the little minutiae details, it will bog you down. Yeah. Delta analysis in trading refers to the evaluation of the difference between the number of buy and the number of sell market orders at each price level. I use this concept primarily in my order flow analysis, and I use the footprint charts and NinjaTrader's volumetric data sheet. But there are other tools that can track trading activity inside a candle, such as volume profile or depth of market. In short, the DOM, which some people know as the price ladder. So what is delta trading? Delta, if I get my, just my laser, yeah. So delta is the net difference between aggressive buy orders initiated by the buyer hitting the seller, hitting the hash, or accepting the seller's price, and aggressive sell orders initiated by the seller hitting the bid, which is the seller accepting the buyer's price. Positive delta, this means there were more aggressive buyers than aggressive sellers. Buyers lifted more asks. Negative delta, this means there were more aggressive sellers than buyers, and sellers are hitting more of the bids. Let's look at an example. If in a candle you get 200 aggressive buy orders and 150 aggressive sell orders, then the delta is plus 50. If the situation is reversed, with more sell orders, then the delta would be a negative number. So in terms of when you see the delta, you will see a positive number and a negative number. And a positive number always refers to the buy side, and the negative number always refer to the sell side. Okay? Unlocking the secrets to spotting weakness, market weakness. This is one of the great things about order flow, and using delta to analyze order flow, it allows us to unlock the secrets to spotting where the market is weak and when a market is being exhausted. Yeah, so we got three types of deltas that we're going to look at in a second. Yeah, but first, let's talk about how traders look at volume before we get into delta. So many traders use volume as a guide to a move being imminent. However, volume on its own is not enough to justify a trade. So if you use volume on its own, you kind of not got enough information to make it worth taking that trade. But delta is really cool because delta provides an additional layer of analysis on top of that volume information. So that now opens up the hidden motive of the market. So you don't know what the market is really trying to do just by looking at volume. But when you use delta analysis, it's like peeling back some layers of that onion so you can see the underlying behavior of the market. So while traditional volume shows the total number of contracts traded, delta distinguishes whether that volume was driven primarily by buyers or sellers. Now, traders can confirm whether large volume spikes are due to aggressive buying or aggressive selling by using this delta analysis. So over here on the right, we have we've got three types of delta analysis. The first one, cumulative delta, is something that lots of traders are aware of. They're quite familiar with cumulative delta, and some of you here will be familiar with that. But delta divergence and delta transition is a less known topic. A lot of traders don't really know about delta transition and delta divergence. So today we're going to look at that. And if you use any of these three, or even use them together, yeah, they can give you clues to whether a move is becoming exhausted or weak. It's quite powerful when you use them together. Once you know the move is exhausted or weakened, you can then look for a setup to take a trade in the opposite direction. And that is without fear of catching what we call a falling knife, which means that you're not trading against a move that still has legs in it, still has momentum. So let's now we know that, let's now look at why delta matters. Yeah. So in day trading futures and trading markets in general, delta analysis is particularly important when a trader needs to assess how likely a market move is to experience exhaustion or weakness. So let's look at some of the reasons why delta matters when trading futures in terms of potential reversals. All right, so let's just see if I can get my there we go. I'm trying to get my pen. There we go. Right. So delta can help in areas of where we see significant activities. So let's just look at something here. So where we've got significant buyer or seller activity at a particular area. I'm still just trying to get this pen. There we go. Right, got my pen. So where we've got significant activity at a particular level, this can act as support or resistance. And sometimes on my footprint chart, I will use these areas and call them like fixed spots or absorption areas. So if we get a market kind of like, if a market approaches a previous level, let's look at, struggling a bit with my pen. What's this pen? My apologies. I'm trying to get my pen onto the screen so I can draw something for you. Right. There we go. There we go. Right. So if the market was coming down and then we got like this area here where we've got like a thick layer of activity from the delta and the market trades down. When we come back up to it, that's like a double top. Some traders like to trade double tops like here. So what happens when we trade back up to this thick spot of activity in the delta, we need to see what the delta analysis is telling us. Is this market moving up? And then as we move up, the buyers start to lose momentum in terms of delta, because if that is the case, we could now look to take a trade back to the downside. But if delta strengthens as price moves to the upside, it wouldn't be advisable to start trading this bounce, this double top bounce to the downside, just because we've got a level, just because we've got that level there. Because if you've got delta growing as you approach a resistance level or a support level, it's likely that if it coincides with price action, which is the move to the upside, it's likely we're going to break through that level and keep going. So let's say one of the good things about it, right? So you can find potential reversals because of it, but one of the good things is that if the market is showing that cumulative delta that's growing, when you are in a trade from, say you got into a trade down here, down at the lows, and you now are trying to get to the upside, you can get, maybe you've got more than one contract, so you can get to the target, which is here, with your size, and then because you've got cumulative delta growing as you approach this level, you don't take all your contracts off at target. You can leave something on to see if you can squeeze more out the trade by breaking through the levels because of cumulative delta and seeing how much more you can get on top of that trade. So that's the beauty of the analysis using sorry, just changing my pen, using the delta analysis. Yeah. So the other thing is market sentiment and position sizing. There are two aspects that play a crucial role in our trading. In terms of sentiment, traders often rely on real-time news, social media, and market chatter to gauge sentiment. This is what we call fundamental analysis. In a bullish environment, day traders may take larger positions, trying to maximize potential gains, and in a bearish market, they might opt for smaller positions. The thing is, when it comes to position sizing, traders often either use a mathematical formula or just simply add to their positions just because they're in a winning trade, which is kind of random. However, rapid changes in price volatility can make trading with size a make or break situation. Sometimes you can get a really comfortable win, and another time you can get destroyed because of that volatility. So when you're using size, it's vital that we have a realistic metric that can be used for trade management. Using delta analysis for seeing when a change in sentiment is occurring is a great way to manage your position size. And because delta is dynamic, it adds further confidence in your timing when you're adding to or reducing your position size. So it's a really cool way to analyze the market when you're dealing with size. Another great use for delta analysis is when managing risk. So the third, I got it as 2 and 2, but it is the third one, risk management. Yeah. So as I say, the great way of managing the risk of your trading using delta is using it with footprint charts. And that helps you to manage risk, especially when applying stops. Tight stops can reduce losses and can be placed near levels where delta shows a significant shift in the order flow. And that protects you from this sudden whipsaw and sudden reversals that the market quite often does. A lot of people get whipsawed out of trades. Finally, delta can be used as a predictive indicator. When our footprint charts are combined with delta, it provides insight into hidden support and resistance levels. And by analyzing delta alongside the volume and price movements, traders can make more informed decisions on where to enter or exit their trades based on real-time order flow. Yeah. So in the next slide, we'll look at some examples of how delta can be used practically. Yeah. Right. I hope you've followed me so far. I know it's a bit, I'm rushing through trying to get through because we don't have a lot of time to do all this training. So I hope you're following me and I'm not, getting too ahead of you guys. So let's look at this chart. This is the ES. See if I can get my my laser pointer again. Right. So we got the ES here. This was earlier this month, and we're going to look at an exhaustion and a cumulative delta situation. Unfortunately, when we look at the data in footprint charts on a presentation, we can't really see the numbers really well. So I'm glad you can see the volumetric data, but the footprint charts we can't see very well. And I'll try and zoom in some cases for you to see. But the main thing we're looking for is in the footprint when we can see size. So if you can see clusters of size in the footprint, that's what you're looking for. And in this example, we're looking for cumulative delta. If you look at my pointer here on the right, we can see cumulative delta. If you follow along there, it's all green. That means it's positive delta. Now, let's look at this scenario. We have this candle here. If we look down, we can see 3,000 delta. Next candle, it rises to 3,700. So cumulative delta is rising, even though the candle is a negative candle. Then we get this very strong move, a very large increase in delta, strong move, 2,000 delta. We get it is a delta transition, but sometimes we've got to apply context to it. In this situation, we get this great big strong move, and we're thinking next candle, the market should keep going. When we look at the delta, cumulative delta, we've reduced cumulative delta by 2,000. So from 3,700 to 1,600. So that's a massive reduction in cumulative delta. In the next candle, what we have is a swing back to positive delta, back to the 3,000. So there's a complete reversal of that 2,000. We've gone back to 3,000 from 1,600 in the cumulative delta. And that is a big indicator of things to come. So now we know that this big effort the sellers made, it's not continuing. Suddenly, after all that big effort, we've gone straight back to the buying being in control. So we can see that there. The very next candle, we get a red candle, but we get an increase in cumulative delta. Yeah. So remember we were talking about if previous slides where if delta is moving towards a support or resistance area and the delta increases, then we should break that level. But the delta on the sell side is not increasing to the downside, it's increasing to the upside. So that is showing us now we're able to get a bounce. So we can see now that this next candle that is red has an increase of 200 in delta. The next candle's even stronger red, doesn't really come much further down, probably one tick. But the delta on the buyer side, cumulative delta has increased by a further 400, probably 450. That is telling us that although the market's trying to come down, more buyers are getting into this trade than sellers on an aggressive level. Now, when we have the next candle, that's increased by another 200. But when we have cumulative delta, as we mentioned in the earlier slide, when it is in line with price action, so we get this increase, continued increase, and we also now get the green candle. So we get a buying candle. We can now expect the market to make that move. We want to see that market now make that buy move. So this is the point where we should be looking to take a buy trade, trying to get into this move, to get past this level where the sellers came down hard. And this is exactly what happens. We get this massive increase again in delta. If you look at the delta bar, we go up to 3,500 in that candle. Cumulative delta goes up by 300 plus. So it's all there telling us that there is a momentum to keep going in this market, and you can see the market does keep going. So that's a great example of how cumulative delta can help you to find weakness and strength. When we look at this other example, crude oil, we'll look at crude oil here. Pardon me. Let's assume a market is trading near significant support level. So you guys might not see this support, but I'm going to show you a cluster. If you can see the cluster, these green numbers, there's a cluster of buy imbalance there and a very thin spot of sell activity. So if I can just enlarge there, so you can see here we get this cluster of buying here and a very weak spot of selling. So sellers are on the left, buyers are on the right here, and we get the numbers that are single digits here, and then we get double digits. So we could use this area as a area of support. So when we come down to this area, we could keep an eye on it and see how does the market behave when we come down here. So you can see as we come down here, we get this selling. There's a lot of selling activity here, and you can see here in the volumetric data, there's a lot of red numbers. It's all selling, but the selling isn't working because the buyers have moved the market to the upside. Yeah. So let's look what's going on here. As we come down with this move down into this support area, what we find is that a lot of sell delta, but no sell strength. So we've come down, and in this area now we get pardon me, just want to move my chart back down so you can see what's going on. Oh, sorry, I can't get those numbers I want you to see. But let's take this thing off. There we go. Right. So as we come down into this area, we can see the sellers are still trying to push down. They've got a delta of 214 there. If you see the delta bar, 214. And then the next candle, they push down, but they only have a delta of 14. The next candle, the delta is being reduced. They now only have 5. And it's all green. So what we have here, a green candle, but red delta, green candle, red. These are all delta divergences. And we get a divergent hammer here. And so when we see that, we're looking for opportunities to buy this market. So now we've got a hammer. A lot of guys like trading hammers from technical analysis. Now you can look at a hammer and see divergence. So you can see that delta, the sellers are in control with delta here, but it's a divergent delta. So now you can look to get a buy trade and take this thing further. So each time the delta is being reduced, aggressive selling is being reduced, you can stay in your trade as you see that. And then when you get to this candle, you can see your positive delta, cumulative delta is transitioned from sell delta. You can see cumulative was sell here. Now it's a transition to buy. And that's a great moment. Whenever you see cumulative delta transitioning from one way to the other, this point, we've got transitioning to buy on that candle, lots of volume and a transition. Then what you see then is opportunity to stay in a trade much longer than normal. So as you can see, oops, what have I done here? Sorry, I've messed up my moment. Yeah, as you can see here, the market really does go. I was trying to move my charts down. It's having a bit of technical problem here today, but you can see the move continues and it does go quite a bit further. Right, so as delta begins to turn positive, traders might enter long positions anticipating a bullish reversal, and that's what we can see in that picture there. So I'm going to be quick now because we've sort of run out of time. So I won't do any more examples now because we've run out of time in terms of yeah, this will be the last example, and we can quickly go to wrapping up and get some questions and answers. So a quick one. Done that again. I'm very sorry today. So let's look at this example here with 6E, which is the euro. Again, this month, and this time we're looking at fixed spots. Yeah. Get my pen on there. So right there, guys. We've got in that area, we've got what we call fixed spots. It's a lump of absorption. It's where there's a lot of activity, a lot of two-way activity taking place here. What I call fixed spots or absorption areas. The market moves up. We had one where the market was doing it at the lows, and we get a delta divergence here. You can see it's a negative delta, but it's a green candle. So we get delta divergence. We also get a fixed spot, and then we get that opportunity where the market goes up. We get the same thing happens up here where we get this fixed spot, and the market then turns away from that fixed spot. So that's absorption happening at the top. And when we look, we can see the delta transitions from buy delta to sell delta. So even though we've pushed up a bit higher, the sellers have taken over the aggressive behavior in this candle. That allows us to look for a sell opportunity, and you can see in the next candle the delta is growing, so we get 39, and pardon me, cumulative delta is growing. Again, you can see that allows you to stay in the trade or get into a trade and stay into a trade and get a few more ticks than normal out of the trade. So guys, I'm just being quick here today because you can't really explain everything in half an hour, 45 minutes. So I hope you understand from that how using Delta in a practical way can help you to have more confidence, help you to see market turning points when market gets exhausted and markets get weak. Yeah. So the primary tools that we use for order flow and looking at delta analysis, today we've just looked at one aspect of order flow, which is delta analysis. And although there are other order flow tools, delta analysis can be effectively done using these three tools here: footprint charts, volumetric data, and price ladder. NinjaTrader provides in their order flow tool set the footprint charts, the volumetric data, and you get your price ladder. So you get all your tools from NinjaTrader suite, order flow suite, and you can use these tools to effectively trade the market, giving yourself that extra edge you need in seeing what other players are doing in the market and getting that edge. Right, so key takeaways today is understanding delta in day trading, the importance of delta for day traders, and delta in the context of futures trading. And by introducing integrating these various delta analysis concepts into your trading, you'll now find mastering market moves and fluctuations that much easier to trade. And if you're day trading, which I believe most of you here are today, you can enhance your strategies and improve your bottom line. So there's your key takeaways for today. As we're running out of time, I'm going to go quickly to questions and answers. And if anyone's got any questions, please shoot them across. I have a problem seeing some of the questions. So if you just give me a few seconds, I'm going to see how I can see those questions. Right. So someone says, what time frame for the chart for delta analysis? 1.5 or 15 minutes, 1.5 or 15 minutes. You can use your delta analysis in any time frame. The time frames that I've been showing on my charts, and I primarily use 5-minute charts. So the time frames you can see on my charts are 5-minute time frames, but you can use this analysis in any of the time frames that you're comfortable trading in. Yeah. Do you need to have order flow on your chart in order to trade delta? In terms of the way that I use delta analysis, yes, it would be important to have order flow on your charts. If you don't have order flow on your charts, I feel you struggle to trade it efficiently. There may be other ways that you can do it. You can use it with the, there's a lot of indicators that have some kind of delta information, but it's usually based upon moving averages. And as we know, moving averages are a bit delayed, they're behind the curve. So I think you're better off when you've got it on your charts. Can you share your chart template? I don't know what you mean about that, but I can if you go over to my website, I'll show my website address, or if you go over to www.successfutures.com, you will be able to see some place there where you can find my email, or you can subscribe to a newsletter. Get in touch with me by email, calvin@successfutures.com. Just send me a note and I will send you a link to get the template that I use for my charting. Do you offer algos that perform the delta analysis and setup identification and trade execution? No, I don't offer algos, but in my training, I give you detailed training so that you fully understand the concept. My training is focused upon how to trade it. We have a how to trade it series, and so we explain exactly how to do it. So you can go away and use any platform or anything that you use to trade and understand what you're doing. But I don't provide algos for that. What level of data do we need? Well, level 2 data is the data you need. But if you're using NinjaTrader, just the basic data will come into the NinjaTrader and give you the information on the telemetrics, on the volumetric chart. So you don't need any special data. You need level 2 if you're going to use the DOM, the price ladder, to get that data driven into there. You'll need level 2. But for the price ladder and the footprint charts, it's just standard data. Where can we learn about this Success Futures course? Success Futures, www.successfutures.com. And we're going to have a quick look at some of that information just before we wrap up for the night. So I've just got a few moments, so we will get to that right now. So guys, that's the end of the questions, but if you do have any more questions, feel free to go to Success Futures, successfutures.com. Right, so tonight, for all you guys who have stayed on and made my night so I can speak to you, and I hope you found it interesting. And those of you who want to take it a bit further and find out more about how to trade and get that edge from order flow and use it, there is a lot more stuff, guys, that will, it's mind-blowing. If you've seen some of my interviews, I had an interview on the 10th, NinjaTrader Live. I had one this Tuesday, NinjaTrader Live. If you can get on to YouTube and find those interviews, you will be able to learn a lot more about what we've been talking about today and some extra cool stuff. I have another interview coming up in October, but I don't know the date. So if you do want to learn about this stuff, the courses that are available, there's one coming up on Friday the 29th. And again, for both these courses, for attending today, you will get 20% discount right up until the November 29th of the last course. November the 25th, sorry. That's the last date you'll get the discounts. And the discounts for the Master the Footprint charts. Now, what we've been talking about today will come into the Master the Footprint charts course. That's the one that's a new course, and that's teaching you stuff that I haven't really taught any of my students. This is stuff I've kept back for myself and a few select people that I've known in my trading world. This is going to be stuff that will blow your mind in this course. Master the Footprint charts will really blow your mind. So this course, if you want to get on this course, the first course is starting Monday, the 21st of October. It was £1,800. Now you're going to get 20% discount, 1,440. And if you purchase tonight, you're going to get an extra cool bonus of three mentoring sessions, 30-minute mentoring sessions worth £300, guys. And in that mentoring session, you will learn some really personal stuff I don't teach people, and I will also help you to overcome any problems you've got. Now, so there's two courses here. One is the Fast Track Trader Development. That does do the footprint, it does do order flow, but it will teach you a lot more of the how to create a playbook and create strategies for each day, for each type of day, and it will tell you a lot about some of the stuff we've done today, but in a broad sense, because I've never really given the full details before. And in master the footprint charts, so that fast track is 5 days. It's a 1 week fast track. That's £1,200. You can now buy that for $960. Use the promo code you can see on here when you go to the website. Copy and paste this promo code. When you go to the website, you'll see the original price. Click on it. It will take you to the paying. And when you go to paying, you'll be able to put your promo code in there. Yeah. But the course that will give you the real golden pot is the master the footprint charts. It's going to be telling you stuff I haven't told people. So guys, if you can get over there and sign up today, within the next 24 hours, you're going to get the bonus of the mentoring. And as I say, that's like, it's invaluable. So go over to the website, successfutures.com, and you will be able to, if I click on this here, you'll see Success Futures. That's www.successfutures.com, guys. Go over there now and try and buy your course if you can. If you can't afford to get this done in 24 hours, don't worry. I'd love if everybody who's here today, go to my website and sign up for the newsletter. You'll get a ton of stuff that is unique to the way I teach the markets. And that will get you going on your way. But if you want to get into the course, go down to Success Futures and sign up and get your discounts. Put your promo code in. Shall we go back to that promo code so you can see there's a promo code there? Put that promo code in and get your discount and your free mentoring service. Right, guys, I appreciate you coming. Thanks for coming, and you've been great. And I always love being here and doing this thing with NinjaTrader. Good to see you. We'll see you in the next show and in the next course when I hope I'll see some of you guys in the next course. Okay. Good night, guys. I'm going to hand over back to Thomas and he's going to just finish off for us.
All right. Well, thank you to Calvin for taking the time to share with us today. If you enjoyed today's session, we hope you will join us in future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided was that of Success Futures and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day. We hope to see you in future webinars. Happy trading from all of us here at the NinjaTrader ecosystem.